Alrighty, what is going on, everybody? Welcome to another evening tracking session video breakdown. We're going to do things a little bit differently here. We're going to start off with the digital asset space. We're going to talk about the recent uptick, how we were able to gauge that there was going to be a continuation over the weekend of risk asset appreciation. I said to you guys, let me just share my screen with you all real quick. Let me know if you can see it, Emiliano. All right, sweet.
Yes.
Okay, so I said to you guys over the weekend that I was personally looking for. I said the current sentiment, our outlook remains, us obviously, of course, here at CYPRX, optimistic, with a positive risk sentiment expected to endure in the short term. This optimism is supported by the anticipation of robust economic growth and blah, 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 blah. So I want to really explain to you guys in detail how I was able to gauge this, how we've been so accurate here at CYPRX, and just really show you all the fine details of picking apart this market. So we're going to start this call off with breaking down the overall cryptocurrency market cap, specific fundamental points that came out, understanding the shift from the bear market, what transformation happened, what's been taking place behind the scenes during the bear market, i.e., the developments, the shift in sentiment surrounding Federal Reserves, potentially cutting interest rates and pivoting from their tight monetary policy stance. So that way you guys have a real firm understanding of what we're going to be looking forward to gauge market direction in the next couple of weeks slash months, and then throughout the rest of your trading career. Hopefully you can use this information to get as accurate as myself, to get as accurate as Usman, engaging price action direction. So hopefully this gives you guys an educational video breakdown and actually shows you guys physical proof of what we've been attempting to try and teach you guys here at CYPRX. Okay. After that, after we go over the cryptocurrency aspect of things, so that way I can upload that portion of the video breakdown for the public on YouTube, then we're going to get into the analysis and recap of GBP USD, GBP JPY, and gold. Okay, so for any of you individuals that are just here for crypto, if you guys want to hop off the call towards the second portion when we jump into the forex markets and then our projections for the weekly outlook this week, fundamentals and whatnot, you guys are more than welcome to jump off. All right. We're going to upload this as well to the session tracking session. So you guys will have access to this through recording. So now that you guys have seen that we confirmed over the weekend, we are looking for a continued risk on market mood. Does anybody remember, and just you don't have to say out loud, but does anybody remember when I put this out in the Discord where I said to you guys, I'm calling it now. This is back in October of last year. Okay, you can see the date of the screenshot, 10/27/2023. So this is October. I said, I'm calling it now, just like in 2017 and 2020, the 2021 bull run. Once the rally on gold is done and profit taking starts to happen, a month after, inflow into crypto will happen. That's what happened last market cycles after gold surpassed $2,000 and started to retrace back below. Now, this is going to full circle and blow your mind. So first, we need to understand what took place. What was the reason for the bear market cycle in 2021 to 2022? First, back in November, for the first time, was when we saw Russian troops on the Ukrainian border, and the announcement scare of a potential war outbreak in Ukraine started to sweep the headlines. So I wrote down for you guys, number one, back in 2021 was the announcement of the Russian-Ukraine war globally, which heightened geopolitical tensions. Geopolitical tensions, I just dropped some documents for you guys just to brush up on your education, a brief overview. In the educational PDF section, I just dropped 3 PDFs for you all. Just going over why risk assets tend to decrease in value during geopolitical tensions or war escalations, why risk assets tend to decrease in value during high interest rate environments, and why, on the flip side, risk assets tend to appreciate or increase in value during the opposite, a low interest rate environment. So in your free time, just go through, brush up on that information, and just educate yourselves, okay? The second reason was because the bear market, obviously, of course, that's what we're discussing. The Federal Reserve initiated its most aggressive rate hike cycle in history from March 2022 to July 2023, with 11 interest rates increased, leading to key federal funds rates of 5.25 to 5.50%, where they currently stand. We also had the collapse of Terra Luna and FTX and all the other, Three Arrows Capital and all this crazy stuff that happened in the cryptocurrency market that just completely diminished the trust and worthiness of the space because of centralized exchanges and because of the stablecoin collapse that we had. Okay, so we had uncertainties and investor caution, obviously, of course, alluding and adding to the war in Ukraine and the interest rate hikes. So all of those factors combined completely tanked the cryptocurrency market. Now, when did we turn around? I'm going to physically show you guys. It's going to blow your minds. Okay. This is why we've been so accurate on calling out price targets. For example, buys on H bar from 4.5 cents, buys on gold from 1810. How are we doing this? It's not because we're just sitting here pressing buttons and randomly guessing this stuff. No, it's because we're tracking this stuff. And I'm sure that Usman does the same thing. He just doesn't make it as public as I do. Okay. So, reasons for bottoming out and turning around in the cryptocurrency market, specifically focusing our attention. I'm going to pull up the charts for you guys in November 2022 to November 2023. We had the Federal Reserve's pivot towards potential rate cuts start to gain traction in the media, meaning Reuters and Bloomberg started pumping out articles. And remember, these narratives sway investor sentiment, which instilled optimism amongst investors. And I'm going to show you guys that via physical screenshots of these fundamentals in collaboration with the charts so that you can actually physically see what I'm talking about. Then we had the pricing in of anticipated future Fed rate cuts contributed to market stabilization as well. Obviously, of course, I just mentioned to you guys reading over the PDF so that way we can save time as to why during low interest rate environments, risk assets tend to increase in value, just to refresh your mindset and what's going on globally and why that takes place. We also had increased institutional interest in cryptocurrencies, combined with lower inflation readings in 2023, also provided support for the cryptocurrency markets. And then in July, we had positive developments such as Ripple and XRP being declared a non-security, which in July brought back institutional interest. And I've played a panel discussion of a representative, a very reputable representative from, I believe, if not JP Morgan, then Goldman Sachs, if I'm not mistaken, but physically saying in front of a room full of institutional investors representing over $5 trillion in assets under management, saying that what brought back institutional interest was for a fact XRP being declared a non-security.
Dried up. I think everyone was saying at the beginning of the year is true. We are starting to see a little bit of movement there, right? Obviously, and I don't mean just because of the bump in the last week, but even before that, we were starting to see a little bit more capital trickle down and then be deployed. And but it was in smaller amounts. Naturally, everybody's looking for a discount in the steal right now, whether it's VC or in liquid markets. And but we are seeing, it looks like a little bit of light at the end of the tunnel for what it's worth. I'm hoping for it to last, but to give a bit of a positive remark. That's all that.
Yeah, I think the just sentiment more broadly has gotten considerably better over the last, I'd call it 2 months or so, especially since the XRP ruling.
So that has been confirmed, not by me, but by reputable individuals, okay? So we had an uptick in institutional interest in 2023, which obviously, of course, drives more market demand, gives the media another narrative to project out to the masses, which again increases demand. Then towards the end of 2023, the narrative around the potential Fed rate cuts intensified in October, November, and December, driving market greed and optimism, and not only the cryptocurrency markets, but also in stocks. Last but not least, institutional demand coupled with ongoing positive developments. For example, the Bitcoin ETF narrative that we saw at the end of 2023, driving this quote unquote institutional demand and whatnot, and this media-driven hype, obviously, of course, fueled more so of the market recovery. So just to cover some pieces as to how and why the market started to pivot, and then heading into where we are at now. So what are the current market conditions in 2024? The market as of right now is still remaining heavily influenced by this narrative that the Federal Reserve is going to cut rates, fostering greed amongst investors. Again, go through and educate yourself on the PDFs that I just dropped to really understand why in a low interest rate environment, risk assets tend to appreciate in value. So right now, what are the market makers doing? They're pricing in the potential of us heading into a lower interest rate environment, trying to get ahead of the curve. So that way, when the Feds actually cut rates and global central banks across the board actually cut rates, they already got in at a discounted price back in 2022, okay? And then we also have, obviously, of course, as of right now, it stands an increased inflow in the largest Bitcoin ETF and outflow from gold. Okay, so we are seeing Bitcoin ETF inflows just last week, or I believe it was literally today, or if not yesterday, one of the largest inflows in Bitcoin ETF since the release on January 10th. So we are seeing institutional demand pick up, albeit obviously, of course, it's not trillions of dollars, but the total cryptocurrency market cap surpassed 2 trillion today for the first time since back in 2021. Either it passed 2 trillion today or yesterday. I don't remember off the top of my head. But it did pass $2 trillion, which is very significant. Obviously, of course, it signals a potential recovery and the potential start. If not, we are already confirmed in a bull market cycle. So let me just show you guys all of this information via screenshots. I went back in time to take all these screenshots for you guys so you can physically see what I'm talking about and how these narratives drive market mood, drive price action. So that way, moving forward in your investing and trading career, you can better gauge tops of market cycles and bottoms of market cycles. Okay, so check this out. This is what I'm talking about. Look at the first fundamental piece when the cryptocurrency market cap back in November 2022 bottomed out. Give in mind that, remember, the market makers were pricing in the potential future of us heading into a low interest rate environment. So for the first time, Reuters reported, you can see right here the date, November 30th, 2022, Fed's Powell rate hikes too slow, but adjustment just beginning. Okay, so that was for the first time we saw a fundamental piece talking about the quote unquote Federal Reserve pivot and other global central banks potentially thinking about pivoting or exiting their tight monetary policy stance. Then we can see in December, this is very interesting because you have to start to pay attention, and we're going to cover this in Forex as well. These market makers, they use fundamentals to push price into specifically pre-planned and targeted areas to either buy at a discount or sell from a premium. Here you can see in December, a fundamental piece from Reuters came out. Instant view, Fed hikes rates by 50 basis points as expected, keeps a hawkish tone. So this just goes to show the power of understanding the difference between a hawkish sentiment, the tone surrounding central bank speakers, what that does to risk assets, i.e. strengthens the domestic currency, the US dollar, most likely, and then vice versa, weighs on riskier assets, creates a risk-off market mood, and creates sell pressure in the digital asset space. Well, you can see when the Fed hiked rates 50 basis points in December, we saw that decline or that sharp sell-off in the digital asset space as the total cryptocurrency market resurfaced back down to the November lows, where the initial rumor started to come into play that the Federal Reserve was going to pivot. But what were these mother truckers doing? Pushing price back down at a discount so they could facilitate orders one last time before the next month we saw inflation fall for the first time since it started, or since the interest rate hike cycle. So here you can see this was in January. This Reuters report was January 12th, 2023. U.S. inflation retreating as consumer prices fall. I'm not too sure off the top of my head what inflation fell to in January and February of 2023, but you can see as the rumors started to flood in, financial market participants got in early, i.e. the market makers, because it wasn't retail investors buying at the bottom here. It sure as heck was not. You can almost guarantee that. Yes, maybe some smart retail investors got in, but this type of price action can only be moved like this by institutional investors with people with massive amounts of money, whales, okay? So understanding that, seeing how they moved the market here when they hiked rates, that was the last rate hike once inflation started coming down. So once inflation started coming down, you can see what happened. Remember, low inflation signals the potential of central banks to start cutting rates, entering into an easy monetary policy stance, or no further need to hike interest rates. So what does that do to investor sentiment? What do investors and market makers do? They're trying to get ahead of the curve. Boom. We're heading into a low interest rate environment. Well, these mother truckers already know that in a low interest rate environment, risk assets tend to appreciate in value. So what are they doing? When they see all these fundamentals and all these things come out, they're buying up risk assets, which you can clearly see given the reflection of the total cryptocurrency market cap. So here in January 2023, we saw inflation come down right after the initial 50 basis point rate hike in December 2022. Okay, market bottomed out. To continue, here we see another fundamental piece where it says, this is from April 12th, talking about March's inflation reading. Here's the inflation breakdown for March. This is from CNBC. The consumer price index eased to 5% in March 2023 on an annual basis, down from 6%. So remember, in 2021 and in 2022, we were coming down from 9%. We reached 5% inflation in March. So you can see that inflation was coming down. Again, what were investors, market makers starting to do? Price in the potential that we were eventually in the future going to enter into a lower interest rate environment due to, i.e., lower inflation readings. The central banks not needing to hike interest rates any further because inflation is now coming down. It's not elevating. It's not going up anymore, right? And we can see what that did to the market. Total cryptocurrency market cap completely went on another rally, up to roughly about $1.2 trillion. Okay. Then further, once the market came back, to further discounted entries, another fundamental piece came out. Significantly enough, what you'll notice is that every single increase in value in the digital asset space is when a fundamental piece came out, which is why I try to tell you guys this stuff is so crucially important to be paying attention to. The first like 3.5 years of my trading career, I did not pay attention to this stuff at all. Yes, I became profitable without it, but once I started to pay attention to it, it put the freaking icing on the cake and solidified the strategy that I now use. So here you can see the fundamental piece reads, July 28th, 2023, U.S. annual inflation posts smaller rise in more than 2 years, so on and so forth. So again, we're seeing a further decrease in inflation from previous readings. Okay, so previous readings were 6 or 5%, right? So again, here you can see another uptick in the digital asset space. Moving on. So this is now end of 2023. I remember in the breakdown that I just gave you guys, what did we see? We saw the rate cut narrative start to heavily influence the market towards the end of 2023. It started to really pick up traction in August, but it started to really gain traction in October. So here you can see when we had this small consolidation, this was back, by the way, okay? This is back when we started to gauge bottoming out on specifically digital assets like HBAR. If you go back into the HBAR analysis chat, I sent you guys screenshots back in October, November of last year is when we started to say, hey, look, we're going to be buying HBAR from roughly around 4 cents. This is why. This is exactly why I was so confident in telling you guys that most likely HBAR is going to bottom out at 4.5 cents. Institutional scalpers slapped some delta zones onto that analysis, and I gave you guys the targets of 10 cents at the time, which is where we're sitting at now. This is why, because I was paying attention to these fundamentals. And here you can see big central banks hit a pause with rate cuts far off. This came out October 26, 2023. So all across the board, the narrative that global central banks were going to potentially cut rates in 2024 started to sweep headlines. Reuters started to report about it heavily, Bloomberg, CNBC, so on and so forth. And you can see that effect that it had on the digital asset space. We, again, further saw an increase in the total cryptocurrency market cap. Here's another fundamental piece, further boosting the narrative that central banks globally were going to cut rates in 2024. This came out November 29th, 2023. Significantly enough, at another bottom in the market. When the market started to consolidate, fundamentals surrounding rate cut hopes came out and further drove greed in riskier assets. Here you can see November 29th, 2023, rate cut hopes buoy or strengthen U.S. stocks ahead of uncertain 2024. So that was another piece right there. Now, heading into more recent times, okay? I want you guys to see these fundamentals right here. This is from Bloomberg. This came out January 31st, 2024. Fed holds rates steady, signals an openness to cut. So the narrative, remember I told you guys where we're currently sitting at. This is why it's important, because if at any point in time this narrative shifts hands heavily and we start to see the optimism and risk assets dwindle, strength back in the dollar, rate cut narrative further pushed back, what would create that scenario? Higher inflation readings, right? Optimistic US data. So if we see those things month over month, as we end February, heading into the FOMC meeting in March and inflation readings in March, we need to be cognizant and not get so sidetracked by what the rest of the retail herd is. The rest of the retail herd right now, they're freaking out. Oh my God, HBAR freaking 11 cents today, AGIX 55 cents, Bitcoin 52,000, but they're not paying attention to the macro environment. Could the narrative continue? Could the greed continue? Absolutely. But in order to see that greed continue, what do we need to see? We'll get to that point in just 1 second, okay? So here we can see that narrative continued in January. Same thing in February. Same fundamental pieces, Bloomberg, Reuters, CNBC, Fox News, all of them pumping the hopium that rate cuts are going to happen in 2024. This is from February 10th. Slower U.S. inflation is set to fuel Fed rate cut optimism. You can see the dates. You can see when the market consolidated. Again, another leg up in the digital asset space. Now, this is extremely important, and this is how and why we were able to see that the market was going to continue optimistic through this weekend, which I said to you guys in this post and this post that I sent to you all in the private analysis section. Okay. How was I able to gauge this? If we go back to the Discord again, where I gave you guys the original analysis, where I said, once we see an outflow of gold, where is that money going to go? You have to understand, if it's not going to go into the dollar, which we didn't see last week, we saw the retracement on the dollar. At the same give or take time, we saw a retracement on gold. That money has to go somewhere. So where is it going to go? Well, the narrative that the Fed is going to cut rates in 2024 still held the most weight. And that money we saw flow into risk assets, right? So that understanding, that simple narrative and that simple understanding allowed us, majority of us here at CYPRX, to capitalize on bullish moves in the digital asset space, which is why it's so important to pay attention. And here, I'm not making this stuff up. Check this out. So US CPI, let's actually go down to the lower time frame so you can see this a little bit better. Because now we're currently on more so of a weekly, or sorry, excuse me, a daily time frame. We're going to jump down to the 4 hour. All right, so look at the price action. The market sharply sold off on the total cryptocurrency market cap. We retested roughly around 1.78 trillion. It was the same exact day that the US CPI came out higher than forecast, which the forecast last week was 2.9%, but lower than previous readings at 3.4%. The actual readings came out at 3.1%. So what are we still seeing? Market optimism driven by what? Lower inflation readings, i.e. fueling the narrative that eventually, due to lower inflation readings, the central banks, i.e. the Federal Reserve, are not going to need to hike rates any further and will eventually lead to a cut, right? Or a low interest rate environment. You see what I'm saying? It's so simple to see. So at the same exact time that US CPI came out lower than previous readings at 3.1%, we saw an increase in the digital asset total crypto market cap, i.e. risk asset, risk on market mood, right? Now, heading into this week, check these fundamentals out. So remember I said to you guys in the chat, once we see an outflow of gold, we're going to see an inflow into Bitcoin. You cannot make this stuff up. I said that to you guys back in October. Check this out. Gold funds see the biggest outflow alongside a rush of money into Bitcoin. This is recent, February 15th, 2024, right? Look at the dates. Same side, on the opposite side of the spectrum, Bitcoin ETFs see a record $2.4 billion weekly inflow. BlackRock's IBIET or IBIT leads CoinShares. Remember I said to you guys back in 2022, 2023, given the narrative surrounding Ripple's XRP being declared a non-security, picking up institutional interest, now we're seeing all of that sentiment start to sweep the mainstream masses. The infrastructure behind the scenes during the bear market was being developed the whole entire time. Digital asset teams, projects, freaking companies, all they were doing the entire bear market cycle was developing, going to summits, going to panel discussions, building custody solutions so that way these financial institutions could onboard themselves. And that time is now. That time is here, right? We also saw this. Gold ETFs have seen a heavy outflow since the 10-spot Bitcoin ETFs launched on January 11th. I told you guys back in October this was going to happen. Remember, not only do we need to see lower inflation readings, the rate cut narrative sticking to the table and driving optimism in risk assets, but we also need to see dollar break below that historical psychological level that it broke back in 2017 and 2021 to 2022, or sorry, excuse me, 2020 to 2021, the 102.8 and the 98.3, okay? If that does not happen and we see an uptick in dollar strength above 105, with higher inflation readings, further pushing back the rate cut narrative, catching the market off guard, understanding why the market has been so greedy. Remember, the market has been so greedy on hopes, right? Not facts. The facts are that inflation is still elevated. We have not reached the Fed's goal of 2%, and the Fed has said that it will be reactive. That means that if we see at any point in time higher inflation readings, the Federal Reserve has said that if they need to, they will hike interest rates again to really bring inflation back down to 2%. So again, we need to be paying attention to that. This is why I'm trying to tell you guys right now, we're at such an important turning point in the market.